Welcome to another edition of the Inspired Stories podcast, where leaders share their experiences so we can learn from their successes and be inspired by how they've overcome adversity. My name is Anthony Codispoti, and today's guest is Joy Marcus, general partner and co-founder at The 98. Founded in 2022, The 98 is an early-stage venture capital firm committed to investing in woman-led technology startups. Their mission is to turn the dial in venture funding, since women-led companies currently receive only 2% of VC dollars. Joy is a seasoned venture capitalist, board member, and lecturer in entrepreneurship at Princeton University. She's magna cum laude and Phi Beta Kappa graduate of Princeton and earned her law degree from New York University. She previously served in leadership roles at Condé Nast and Time Warner, bringing years of experience in scaling tech-enabled businesses. Joy has been recognized in the Hollywood Reporter's Digital Power 50, listed in Forbes 40 over 40, and honored by Crain's as a woman to watch. She continues to champion female innovators through her work at the 98, providing both capital and guidance. Now, before we get into all that good stuff, today's episode is brought to you by my company, Add Back Benefits Agency, where we offer very specific and unique employee benefits that are both great for your team and fiscally optimized for your bottom line. Imagine being able to give your employees free access to doctors, therapists, and prescription medications in a way that puts more money in your staff's pockets and the company's too. As an example, one recent client with 450 employees boosted net profits over $412,000 a year. Results vary for each company, and some organizations may not be eligible. To find out if your company qualifies, contact us today at addbackbenefits.com. All right, back to our guest today, co-founder and general partner of the 98, Joy Marcus. Thanks for making the time to share your story today.
Hi, Anthony. Nice to be with you.
Okay, so I'm checking out your LinkedIn profile here, Joy, and you've had a lot of really interesting stops along the way. Before we get into talking about how the idea for the 98 came about and the work that you're doing there, maybe let's talk a little bit about your time at MTV and the impact that that's had on you.
Yeah, it is notable. I mean, I definitely have had a number of stops along the way. MTV is quite notable to me. It was a decisive moment for me, honestly. I was given the opportunity while there. I entered MTV as a lawyer. I had been trained as a lawyer. I worked at a fancy law firm. I did, stayed up all night on M&A deals and, did that whole drill in like the late 80s. And it was really hard work, but I learned a lot. I decided that I really want to focus on the media and entertainment industry specifically. Had the opportunity to do so. I was recruited first by a very notable entertainment law firm and out of there by MTV to be the first lawyer for the MTV channel. So there were no lawyers. So MTV was rogue. MTV was just sort of like operating,
Wait, I see on your profile here that you joined there in 1993. I mean, yes. MTV had been around since, at least the early to mid 80s? And you were the first attorney in all that time?
Well, that was dedicated to the channel. So Viacom had lawyers and MTV Networks, which was like Nickelodeon, MTV, blah, blah, blah. Other channels had lawyers. But I was the first lawyer that was like, no, you are only working on MTV.
Okay.
And it was about time. And one of the first things I did at the channel was, and this is like not a secret, they had no rights to any of the music videos they were showing. They were showing them on a promotional basis. So two things happened. I got there like day one, they handed me a stack of paper about a mile high and was like, there's this guy, Jon Stewart. We really like him. We saw him in some comedy club and we want to do a show. And like, can you lock him up for Viacom for like the next 5 years? And so I did that. I won't talk about how much money was involved in that. It wasn't very much. And then the next thing they did was like, oh, the Viacom board's really angry with us. Like, we're showing all this content and we don't have any rights to it. Can you like fix that? And I'm like, sure. And the next thing I knew, I was like on the phone with the general counsel of Sony, like in my little office at 1515 Broadway, screaming my head off at him, like, no, 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 we need to do it. We need to do it. And we need to get rights to the videos. We need to be able to show them legally. Help, help, help. We won't promote your artists if you don't do it. So we were standing in a good stead because we were very popular. And in all seriousness, we were like the main promotional outlet for the content. So for, getting people to like actually buy at the time, I think we were up to CDs at that time. So we were important to them. They were important to us. Eventually, when that happens, I find in life, no matter what, usually a deal gets done, and the better the deal, the worse everybody feels about it when you sign it. And then, everybody kind of operates under it. And we managed to do that. And kind of on the back of doing that fairly well, I was offered a couple of opportunities, and and this is why it was so seminal, getting around to that point. I was offered the opportunity to not be a lawyer anymore. And it was kind of a big decision because, I had spent a lot of heartache over, law school and staying up all night at a big law firm. People were great there, but the work was really, demanding. And I'm not scared of work, as most people have noted about me, but it was, just really, really crazy. But I had an expertise and I was very confident in it. And to make the leap onto the business side where it was going to be all learning was a big deal. And like other points in my career, it was seminal in that I did it, but it also set me up for I was willing to do it again because it worked out pretty well. So making that leap from this very steady, you're a lawyer, you know what your job is, how to get stuff done, to, okay, write a business plan for MTV in South Africa. What does that look like? What does that mean? If you build it, will they come? Those kinds of questions, which I had not yet been asked ever professionally. It taught me a great lesson that I could morph. I was able to make those kinds of transitions.
You weren't fixed as the person that you once were. You had the ability to grow and to adapt and find new skills.
Well, to put it in the language I teach my students at Princeton, I had a growth mindset. I was willing to do something I didn't really know how to do and figure it out. And that, I think, that willingness has stood me well throughout the rest of my career. And I realized okay, you're a decent quick study, maybe not the quickest study out of anyone in the world, but you're a decent quick study, and you will figure out the next thing. And it also taught me that the secret to that is really surrounding yourself with the absolute best people possible. And I would say I was fortunate at MTV, not so much at people reporting to me, because I still wasn't, even though I had a vice president title, there are a million of them at MTV. I was, fairly junior still. My peer group was so strong, and I was able to ask folks in my peer group really hard questions and get really, smart answers back right away. And it was a very supportive environment for that. It wasn't particularly the channel was doing great. We were if you had a great idea, you could throw it up against the wall and, see what stuck. And, people were very, very open-minded. So it wasn't this gross kind of competitive environment. It was a very supportive environment, honestly. And that's how we got great things done. And it was a moment. It was a moment.
So say more about what that process looks like for you, adopting a new skill set. I mean, you kind of touched on it a little bit, you had a great network around you that you could go to and say, hey, I'm not experienced in this. Can you help me? How do I start writing a business plan?
To me, it's always been about surrounding myself with people. There's a little knowledge you need to acquire. So MTV did send me to Columbia to their executive education program. I did kind of finance courses and things that, about sort of corporate America that you don't learn in law school. You learn quite a bit, a law degree does give you a good background. So I learned the basics, basic, financial statements, things that I needed. I could never write a business plan without that, right? So I got that basis in education. So going back to education is not a terrible idea, particularly at a relatively early part of your career. So that was good. It was good that I did. I also did it when I was very pregnant. So that was a challenge. But there's also there's that whole aspect of like baby making throughout all of this. But I was very pregnant when I did that. So I was really, really busy. I was doing a full-time job. I was studying at Columbia and I was pregnant with my first child. So it was like kind of a moment, a trifecta moment for me. So, get some education, like acquire some knowledge, I think is like the takeaway from that. And then it's about surrounding yourself with the best people and knowing who the best people are to ask the right questions of, don't waste your time with those who are going to withhold, forget those people, literally forget those people. Surround yourself with people who are going to be giving and generous, and want to impart knowledge and want to share and want to just build something together. And I think we had that going at MTV in a very big way at that moment in time in the mid 90s. Again, we were doing well as a business. It was easy to be that way.
As we're recording this in June of 2025, I'm curious, has your process for acquiring new skills evolved at all? We've got the internet for many years now. Now we've got, the large language models and AI, where maybe it's easier to sort of acquire some of these skills now yourself. Or do you still kind of go to the same sort of tried and true, which is who's in my network that I can go to and ask for help?
Honestly, I do both now, but I still rely mostly on network. Of course, I use AI. Of course, I, go out to Perplexity and ask a question. Like, who doesn't do that now? You have to do that now. It's just so efficient. But my true source, my source of truth, if you will, is always great people. Mm. And I have really tried to kind of almost curate great people in my life throughout my career. I had dinner last night with one of my close friends from MTV. I am still really in touch with those people. I am very close friends with the person who was my office mate at my first law firm. Like, if they're great people, I really try to keep them in my life. I work very hard at that. And I'm also willing to give, right? So if you're willing to give, people will be willing to give back to you. And that's how you create greatness, I think. That's just the magic for it, I think.
Let's spend just a second, sort of super mini masterclass here on keeping these wonderful people in your life. What's that process kind of look like?
It's tiring. So it involves, a bunch of wine, going out when you don't feel like it. Seriously, I mean, truly, like I am like out every night this week. I am like old and don't feel like doing that all the time, but like it's fabulous people, and I'm going to be traveling this summer and I want to see them before, I can't see them. And obviously, it's not just the professional part of them that I enjoy. I don't think there's anyone who I'm purely at this point that's lasted as long as that, just, hoping to get professional feedback from. They're all friends. But it doesn't hurt. I was going to say a worse word, but I don't know. I'm keeping this PG. It doesn't hurt that I also like them.
Yeah.
And like to spend time with them. But like when it hits the fan and I have a real problem there, I've definitely had those along the way, like tough businesses crumbling, needing to be rebuilt, that kind of thing is always happens. They've been there for me. It's like, okay, what would you do if, what would you do this situation? And I do it for them too.
Yeah.
And it's just the most valuable thing, like to all the young listeners out there or watchers, I don't know where this is going to be, do not underestimate the value of that. You can't get everything from Perplexity. You can't get everything from your HBS class. Like, there are going to be people who just have knowledge from experience that are going to be very valuable to you.
And other introductions that they can make, which is something that Perplexity can never do either.
Absolutely. Perplexity will not replace you. Yes.
Yeah, I love that. I'm glad we sort of took a little sidebar on that.
Yeah.
Now I'm going to, Joy, kind of fast forward because, there's a lot of interesting stops along the way. Barnes & Noble, Time Warner, Gotham, Condé Nast, oh boy, yeah. BBC. But I want to make sure that we spend the bulk of our time talking about the 98. So Tell me how the idea to start this firm first came about.
Yeah, so Linda and so Linda is a big part of this. I just have
Linda,
to, like Clarizio, my partner in the 98. So Linda and I went to college together. She actually brought me some very grainy photographs from a dorm room at Princeton to a meeting the other day. I was like, oh my God, my hair. So it's like looked really different. So we weren't roommates, but we knew each other quite well in college. And I say that only because I have this very close circle of roommates, so I have to give a shout out to them. They are not that. Linda was something else. Um, and she and I sort of had kept in touch along the way and really came together again when I was at what was then AOL Time Warner. We were actually in the same group, the infamous business development group at AOL, which was cutting all those crazy deals. We were part of it. I had been kind of elevated into the Time Warner corporate area. Linda was also elevated, running very big division at AOL, but we were very much in touch with each other. And started like having lunch in New York and just talking over like the next 10 years, remained close. And we were both kind of at this stage of our careers where we wanted to kind of own our own thing. I think both of us felt the need for that, the need for like to build something that was uniquely ours. We still wanted to make a lot of money, truthfully. And because 98's not, we're not a straight up impact fund. We are a for profit endeavor. And I'll explain how that works a little bit. But we also saw we saw both an injustice, but also basically what we thought was an overlooked asset class, which is that women, and just to get the statistics, you got to be a little careful with the stats. 2% of all venture capital dollars, not 2% of deals, all dollars invested, goes into female-only founded companies.
okay.
There's a higher percentage, somewhere in the teens, or maybe a teeny drop higher, based on who you're looking at. PitchBook, or the data's not all synced, that go to teams that are founded both by men and women. But I think it's safe to say that 80% of venture capital dollars goes to all male teams. So
Why?
that seems crazy. Why? Because the industry is about pattern recognition, or has been. So if you are a 50-year-old, if you're like a 50-year-old white guy who's been doing this for 20 years, and you are good at it, and you've made a lot of money doing it, and you've made a lot of money investing in 27-year-old white males in hoodies, you're just going to do that again, right? There's very little incentive for you to break the model. And the only incentive will come is if you see success in breaking the model. And so that's what we're after.
You need a different pattern.
Yeah. You need to show that a different pattern breeds success. And there were glimmers. So we weren't just being crazy, right? There were glimmers of hope in the model, right? There were some studies that had been done about diverse teams, and in fact, all female teams, returning capital in a more efficient way to investors. Higher ROI, meaning capital returned, sooner at a better rate, essentially. So First Round Capital done a seminal study on that. It's getting kind of long in the tooth. That study now was done in the late teens. There's some stuff coming out of HBS. There was some stuff coming out of BCG. There were glimmers of kind of hope around, no, women return really well. Maybe we need to break the pattern. But again, if you're sitting in a big fat firm on a couple $100 million or maybe a couple $1 billion in assets under management, and we've been investing in men for the last 20 years, it's really...
It's working for me. Why?
It's working.
It's not broke. Why fix it? Right?
It's working for me. It's working for my investors. This data is only a couple of companies. I don't really trust it. I don't really know. And I think it really is taking a bunch of people who saw the data, believe in it. They are mostly women, to kind of begin to break the mold. And that's what we're trying to do. along the way, because of this data, we believe that our returns will be higher. And I can tell you, we're sort of little over midway through investing our capital and hope to be, going out to raise another fund sometime soon. And our companies are doing pretty well. And,
What
so
can you tell us
we're
about them? What kinds of companies have you invested
we,
in? What
yeah,
state are they in?
they're all private companies and, in sort of relatively early stage. So I'll tell you our investment thesis, and then I'll tell you kind of the kind of companies.
Great.
So our investment thesis is basically put a woman in the mix at the top and things go better than if not that, essentially. And that there's value for money, and that it's just more difficult to raise money if you're a woman. That's just true. Also, we see it in the numbers, right? So undervalued asset class with high return potential. Who doesn't love that, right? So that's the core of our thesis. And that is proving out pretty damn well so far. We also, given who we were, and we both are women who have run fairly significantly sized businesses and know how to scale. And I had done a lot of 0 to 60 too. Linda had done more later stage stuff, and I had done sort of early to mid stage businesses, quite a few of those. So we had some complementary skill sets there. Our thesis was, don't be the first check. We're probably not going to be great at the first check.
Because that's not really the space that you had played in. Well,
Correct.
I mean, you did some early stage stuff, but not right at the beginning.
Exactly. Before the 98, I had never sat down at a blank screen and started writing the plan, like completely, right? I may have done a little bit of that kind of work at MTV, but I was working with this gigantic brand and this gigantic company behind me. All my other startups, and I have run a couple of them and I've had some exits, I came in as like a seasoned executive to help move the needle, raise capital, get the company to exit. So I wasn't ever really the like ignite person. So I felt that we would be more valuable. Linda and I both thought we'd be more valuable at a slightly later stage. So where we invest kind of, and it's a little cliche, but there's some evidence of product market fit. And meaning like someone is using the thing or buying the thing, and it's just starting to scale. Now, it's not completely done. There may still be pivots along the way. It's not like, a Series B, C, and onward where you kind of know what the business model is and you pretty much have the product locked down. It's just there's evidence that something is working, right? And that we're on the right track. The business is on the right track. Again, where we invest, there still may be a pivot. There may be changes to the product. The market might even morph a little bit and we might have to move. There's things will happen. But it's not at the I'm not really sure what the product is. I have a big idea about a need and which there's room for that. And there's room for investors in that. Have a talented person come to you and say, I think the world needs X. Here's my evidence that the world needs X. Here's what I think I want to build. Great. Those are first checks.
That's not you. Right.
And
you understood your lane. You wanted to be just a little bit further along. Yep.
Further along. And so as a consequence, we're willing to take a slightly higher valuation, obviously, and perhaps on a little bit less than we might if we invested earlier. I always say to my Princeton students, 100% of zero is zero. Like, I'd rather get in on, the famous.
Something that's got a little bit of traction. Yep.
Yeah. Yeah. If not, better words of Eric Schmidt to Sheryl Sandberg, the rocket ship, right? I'd rather get that seat, even if it's a little one, on something that's going to clearly take off. And again, not so clear, right? We're still taking risks. We're investing in a stage where, it may be an unproven CEO, an unproven founding team. There's something about them, that we've identified that we like and that we feel is uniquely suited to the business they're creating and the problem they're solving. that's a big part of it.
And so is what
Yeah.
you're providing just the check, or is there operational assistance that goes
Oh my
along
God.
with this?
Yeah. Not at all just the check. So so our thesis is, women undervalued asset class, some evidence of product market fit, some uniqueness of founder and founding team to, solve this problem, create this product in a way that maybe no one else in the world could, or at least as good or better than anyone else in the world, right? Like those are some of the criteria. The next part is, can we uniquely provide value? And, and when you look at our resumes, for me, you think content chick, digital media. Yeah, I morphed from TV to digital, thank goodness, pretty early in my career, stayed current, stayed relevant. But, that's been my lane essentially. What you might not be as obvious is I've run large tech teams. I've had large tech teams report into me. I've had to solve problems for big companies using technology of others. So I've been a SaaS buyer at many points in my career. So I know a little bit about what it takes to, for example, sell a technology product to a big company. So therefore, I thought, okay, we can, and Linda also, right? So we thought we could, in theory, be excellent SaaS investors, software as a service investors. And that's a lane we both felt very comfortable pursuing. So we have a lot of SaaS in our portfolio as a result. And
is it mostly SaaS? Are we talking like all software? Is there some like hardware tech in here?
There's a teeny bit of hardware. We generally don't invest in hardware. We have one company that uses a sensor. It's actually it uses a sensor to detect ethylene. I love this company, so I have to talk about it. Ethylene emissions from fruit and
why? What's the use case? Detect rotting?
How fast it's ripening, how fast it's going to rot when retailers, and it is, without again going too many names, too much detail, private company has deals with like major retailers for, multitudes of money. And
so what, like
a ton of value.
Like a grocery store would put this in place, and so it has an idea if the fruit that's on display is getting close to turning, or
no, it actually tells them which fruit to put out when. So they're like getting fruit from packers. They know how to sequence their fruit. They know if the fruit's not ripening fast enough to turn up the heat. There's a lot of there's 3 or 4 products that the company offers to both retailers and packers. So that is, at this point, the only company that has even any bit of hardware.
Can we give them a shout out? What's the name of this company?
The name of the company is Strella. It's an amazing company.
Strella. Right.
So, and they have a teeny piece of hardware. We have no other hardware in our portfolio right now. So we try to stay away from hardware. We're really kind of pure, pretty pure SaaS.
Are all of them
pretty pure SaaS?
Are all the rest of them strictly SaaS? Everything now is sort of layering in AI, but I'm wondering if is there anything in your portfolio that's like straight up AI?
Yeah, we have a company named Private AI that is, really grounded in AI as its key differentiator. And again, without talking too specifically, what they do is they take lots of unstructured data and make it useful for companies by eliminating the privacy protected element of the data, so companies can use it. It's like very broad.
I'm intrigued.
Strokes.
Are you allowed to say more, or is this still kind of like under wraps?
They're all out there, working in the world. I just, don't want to give too much detail on them quite yet, because they're all at the stage that they're at and evolving, quite frankly. Fair enough. Are going to grow to be something else by the time someone listens to this podcast, potentially, and grow in ways that perhaps we're not even foreseeing right now. And this podcast will last a long time. And that's my only hesitancy, honestly, that this will get dated very quickly. Yeah, so because they are young companies. Yeah.
Let's talk more about the operational support that your portfolio companies get when working with you.
Oh, yeah. So we do soup to nuts, kind of everything for them. We help them certainly in fundraising, in accessing other VCs, sort of syndicating rounds. We do that at scale for sure. We are extremely good at corporate introductions for SaaS companies. So, Linda and I, between the two of us, have, what we say, like 70 years of operating experience in like kind of corporate America. We just know a lot of people. And, because we've been doing it for a while, the folks we know are pretty senior. So we can get them intros at kind of some of the, senior levels at, in the case of Strella, very senior levels at some of the major food retailers, um, as an example, since we've talked about Strella. So that's, I think, been super helpful. Those introductions have been super helpful, both on the raising money front and also on the, um, just operational deal front. Both Linda and I have also, in addition to having run tech teams, have run sales teams. So we have companies obviously who are selling and have to structure things like commissions and incentive programs and all kinds of good stuff for burgeoning sales teams. And I think both of us have been very helpful to our portfolio companies in trying to, helping them figure out how to hire the right salespeople, how to incent them properly, you know, identifying perhaps when it's not a good fit, those kind of like nitty gritty kind of operational issues we do get in the weeds with our companies. So once we invest, we do like extremely regular meetings without being pains in the neck. Extremely regular meetings with the CEOs. And frankly, if it's like we've got nothing to offer that day, we get off the phone pretty quickly because both of us have run businesses and none of us want to waste anybody's time. But if there are real, problems to address or frankly opportunities to bring to them, um, you know, we're happy to do that. Another like little magic about the 98 is that we have a lot of LPs, and our LPs are for the most part high net worth individuals, all of whom have really a lot of great operating experience in a variety of sectors. So pretty much any company, even when we're at the evaluation stage, we have one or two LPs who will bring in to the assessment and say, like, for example, if it's healthcare, which, both of us, it's not kind of endemic to what we kind of grew up professionally doing, but we have some really senior healthcare analysts, executives in our LP group. We always bring anything we see in healthcare, we bring to them. And when I talk healthcare, I'm talking mostly, the tech side of healthcare, right? And not devices. So anything that automates some aspect of healthcare that doesn't involve kind of a device is kind of a sweet spot of what we're looking at. And we always bring in our experts, always. And then, we bring them in again once we invest. And if they have, they might have specific expertise, have seen a pattern before we hadn't seen in the domain. They might know people, we don't know, who they can bring to the portfolio. I mean, we just had our semi-annual LP meeting, and I'm still dealing with the emails coming through from our LP base saying, I have someone I can introduce to so-and-so. I have someone I can introduce to so-and-so. So we really activate our LP base. The idea really is, I mean, our first thought around this was not just a VC, but an ecosystem. And I think what we've created with our LP base is like de facto an ecosystem that we bring to bear for the benefit of our portfolio companies. Can we increase on that ecosystem by, adding other things, a boot camp, training programs? We do breakfasts where we bring in experts to talk about how to hire a sales team, how to handle X problem. We have like specific kinds of events around that for the portfolio, but perhaps something more formal in the future that really helps the portfolio companies in a way, even beyond what I've just described, is kind of what we're thinking about right now. Like a strong ecosystem is really what we're aiming to create. And the 98 first fund is kind of like the beginning of that.
Yeah, it sounds super valuable. Let's back up a bit, Joy, to kind of when you're in the stages of considering a company to invest in.
Yeah.
Thinking beyond kind of the typical metrics, what sort of signals are you looking for? Maybe things that reveal a founder's capacity to pivot or to, persist through challenging times?
Yeah. So we're looking a lot. We're looking a lot at the founder. I mean, because we invest post product, we are also looking at how are people using the product? Are they paying for it? I mean, we have those data points, but those, everyone has those data points. Everyone's looking at that. Everyone has like this magic number of $1 million in ARR. We don't stick to that, by the way. We want to see evidence of fit defined in each industry, maybe a little bit differently, and evidence of growth and retention, basically. So those are like data points kind of everyone looks at. I think most people look at what we look at in founders as well. We're looking for a lot of grit, right? We're looking for someone who may have stumbled before and got back up. We are looking deeply at how they think, not so much what they've produced, but how they've gone about producing it. So people always ask, like, even at the stage where we invest, when you look at a 5-year model, it's like, that's crazy. Like anything could happen. That's why I'm loath to like talk about these companies with more specificity, because so much can happen in the next 6 months to any of these companies, hopefully mostly positive, right? So we know that, but we still ask for it. And, it's de rigueur at the stage we go in, which is kind of late seed, early A, to have that anyway. But mostly what we're looking for is how do they think? What are their like analytical abilities, touch points, depth of thinking? What's their intellectual integrity around putting something like a business model together? Is there something in the model that shows that they haven't thought it through, for example? They've just missed like a synapse, like some connection that should have been made was not made. Those to me are always very telling. Are they like, absolutely, I won't invest, they miss something in the model? For sure not. For sure, like it's just like a data point. It's like they're being intellectually lazy. Maybe there's a little bit of lack of integrity. That's a huge red flag, and then forget it. But maybe just like maybe a little intellectual laziness. Can we overcome that? I don't know. So that's what we're looking for. Looking for their like thought processes. How do they think as individuals? How do they think through problems and get through problems?
Is there one or two maybe specific questions that you really like to ask that kind of get to the heart of what you're looking for? Because what you're describing sounds more like a process, like you're going through the entire business model and you're sort of, okay, did they miss this? Did they? But are there sort of like questions where like the answer is like particularly revealing to you?
I always like them to know a heck of a lot more about their market than I do. So, and this is not, rocket science. I think almost every investor thinks this. Like, if they don't have a very strong sense of the competitive environment and the market dynamics and the market size, and they haven't really thought all of that through, again, that to me is like intellectual laziness, that it's just like they're not going to win. They've got to know more. They've got to know something I don't know just from Googling, around before the call. They have to have some kind of insight that would not have been obvious to me. And that always comes through in a first 15-minute call. Like, what is your insight? Because they've already been operating in the market. What is the insight you're taking away from the market? And that to me is super telling. It's like, it's all condensed in that answer, because it's like, it's their intellectual wherewithal, their willingness to like push themselves to think things through. All of that comes in that answer, I think. So or one thing I always inquire about, kind of the overall, where you fit in the market, how the external factors would be affecting this product you're about to put into market or you have put into market.
I'm kind of curious to hear, from your experience as a lecturer at Princeton, what do you think are the recurring challenges or misconceptions that you see among either young entrepreneurs or aspiring entrepreneurs that you can kind of help steer them in a different direction, kind of put them back on track?
You mean about venture capital or like overall?
Let's stick specifically to venture capital.
Okay. Um, Look, I don't think when I talk to my Princeton students, they have no idea what venture capital is.
Okay.
I mean, they're 18 years old, some of them. So I don't have that many freshmen in my class. I teach a
Okay, so then
large
let's
class.
twist the
Yeah.
question and have it be more about
Yeah.
business in general then.
Yeah. I mean, I think there is the biggest challenge is opening their aperture for my students, certainly. So their world, think about it. They've had, high school, right? Some of them, I've taught kids out of COVID, who did high school during COVID. So their worlds were super small. And yet, they're at a place like Princeton. They've obviously achieved something great. Like, they awe me, my students. I have to say that. Like every single one of them is, you know, done something like unbelievably world class by the time they get there. And that's just the truth. That's kind of what it takes now. Not when I was there, but it's what it takes now. So they're kind of superhumans already a little bit. But their worlds are very small, and one of my challenges as a professor, I think, is to open their aperture a little bit. So I'll tell you about the evolution of my class because I think it really shows this. So initially, I taught a class and I gave them about starting an enterprise, right? And I was like, come up with a great idea. We're going to get you through it over the course of the semester. There's a lot of reading, a lot of Harvard Business School cases I throw out there, whatever. And I got things like, literally, like toilet seats that automatically go down, at a frat house, alcoholic chewing gum. I mean, I got crazy, like, and by the way, it was Princeton. So the toilet seat guy came in with a prototype. So the class, he had built the thing. He was an engineer. And it was like amazing. But I didn't think the world needed that.
What
And
wasn't really a problem worth solving.
Right. Exactly. And I didn't think, and they just weren't opening up their aperture. So I changed the class about 5 years ago. I've been teaching for about 7 years. I changed the class about 5 years ago for them to address the UN Sustainable Development Goals, which are like too ridiculously big, like poverty, hunger, gender inequality, climate change, they're just like ginormous, big ass problems. And now, it's kind of the same class, but they have to come up with a solution to those.
Wow.
And now
that's asking a lot.
But I don't ask them to like solve the whole thing. Their goal is to solve like one little aspect. Like, how do I get like simple solutions? I had someone come up, and not necessarily technical, like a student who was like, the valedictorian of her high school class in a rural town in the state of Washington. My student. It's like not an atypical profile of one of my students. And she was like, my high school had no resources. I was very lucky. My parents cared a lot. We were buying books on Amazon. They were able to purchase those, but like we had no resources. She came up with, and one of the things was like equality in education. And she like devised this whole system for like learning vans to go around to these rural schools. And she's like building it now. And it's so damn simple, but it's so genius, right? It's like exactly what the students need. They need someone to show up and like for free, give them some more motivation to learn. So it's stuff like that like really jazzes me, but it also opened their aperture. Like they're still like her drawing from personal experiences, but they're taking their personal experiences and kind of broadening them into solving bigger problems like equality in education and, access to, there's others that have done like access to food and things like that.
Do you like where the class sits now, or are you already envisioning sort of the next evolution of it?
It's funny you ask because I am working on a little bit this summer. I may change some things, but this thing where they try to solve a really big problem, I'm not changing. I'm going to write a book about it. It's amazing.
I love it.
I get really, really smart 18 to 22-year-olds thinking about the world's biggest problems. It's fantastic. Like, how
That's what
lucky am
we
I? It's like
need,
the great,
fresh
like
perspectives.
exactly. And like some of them may build it, like who knows? Some of them may build one. So, it's still early. It's like I'm only 5 years into teaching. So, 10 years out, maybe one of these ideas will get built and change things.
What is it
So,
that you think then that founders get wrong or misunderstand about venture capital?
I do think that a lot of founders view venture as a check and that's it. And they kind of, prefer you to go away. None of the ones we have, because we kind of vet for that. Like that's not our model. But and they're look, there are different motivations. Let's just call it, right? Like VCs are motivated to, have an exit relatively, the best exit possible, but in a relatively, reasonable time frame.
You have to get your investors their
Founders,
return. That's sort of how the whole
absolutely,
model is built. Yeah.
absolutely. So founders may have a longer time frame. And that's actually something we vet for. How are they thinking? Even initially, before we write the first check, how are they thinking about exiting? Is this going to become a lifestyle business for this person once it gets profitable? Like, how are they thinking about it? Do they really want, a big exit? When I hear a founder talking about, you know, I think this can be an X whatever size company, and that's a big number, I'm pretty happy about that. At least they're aspiring to that. Reality may change things, the world may change things. Oops, I did lose one of my things. Excuse me for a second. I'm going to go get it.
At the start of the interview, Joy expressed
There
concern that might happen, but we
it
asked that she
is.
use the headphones because the audio works
I
out
know.
better. So
I
we
have
roll
them
with
on
it.
this.
That's all right.
I have them on the smallest thing. I have really little ears, so they always fall out. I've been playing with them the whole time, but you do hear me well.
Yep.
So there's like a tension, between founders and venture capitalists, and I, I think that's healthy in some ways because there's always this like trade-off between, profitability and growth and, all those kinds of trade-offs you're making kind of at every stage when you're dealing with young companies, as we are. And we like to get beyond that tension if we can. And, we're not like your best friend. We're here to offer critique, guidance, sage advice, hopefully, and capital, right? But I think some founders just view it as like, I don't trust these people. They're just money, and we don't invest in those people. I would say all of our founders are not that. All of our founders welcome our feedback, welcome our introductions. They love our cash, of course, but like it's well beyond that. And I would say that there's a human element to it too. I mean, I say this to my class and I say it to the founders I talk to. It's a marriage. Once you're on a cap table, it's like really hard to get a divorce, right?
Mm.
And so you're there. And, I know there's a secondary market. I mean, if we want to talk, details about the industry, there is a secondary market and stuff, but like, you don't really want to go there. You want an exit out of, your investment. And so it's truly a marriage. So we're cautious, and I hope the founders are cautious about us. They should diligence us like crazy. We do them, and we expect that they do the same about us. And then once you're kind of in the marriage, then you kind of know what you've got.
Joy, what's the best decision that you've made for your business so far?
Linda as my partner, for sure. That's like the number one best decision.
Say more about Linda and how this partnership works so well.
We're really different. I mean, when you look at us, we were both like scholarship kids at Princeton. Like we have very similar background, immigrant parents, scholarship kids at Princeton, like very similar. Like you would, like looking at us both lawyers, like looking at us, you would be like, oh, but we're quite different. And I think we really complement each other. You know, Linda's like super brilliant. That's good. That's always good. But I think the biggest thing is mutual respect for each other's capacities and intellectual capabilities, but also like judgment, which is a really big deal. And we know where, one might be weaker on some aspects of judgment, one might be stronger on some aspects of judgment, and we really complement each other. And, like we fight about that all the time, and it's like kind of great. I think it's super, super healthy. And so I think that by far, like, and that can be broadened out as a learning moment, I think, for the audience, which is your team is like your most important asset. It goes back to my networking thing with friends and colleagues that become your greatest source of inspiration and of knowledge. Certainly those you work with together as a team. And this is like, it's just, we have analysts from Columbia Business School work with us, but like it's mostly her and I running this fund right now. And it's, every day. And if we didn't have that kind of mutual respect, I think it would be pretty tough. So I think that was like by far the best decision. I think we took money from really great people and we pursued them doggedly. Is that a word? I've never said that word. I've only read that word. So we pursued them pretty carefully. Like we wanted to have, look, it was no picnic fundraising, but in the end, we did have some choice, and we wanted to have people who we knew could add a lot of value in addition to writing a check. And for the most part, that is the case of all of our LPs. And there is not a single LP pretty much in our entire sort of ecosystem that I would hesitate to call and, ask a question, ask a favor, ask for an introduction, sort of like diversifying and being really careful about who's in that mix, I think was also like, to the extent it was a decision, which it was to a certain extent, was also really good. And there are other like sort of nitty gritty little good and bad decisions, we made along the way, but for the most part, good. For the most part, good.
So obviously you value your partnership a great deal. It's a big part of the reason why you think you're having the success that you're having. As you're looking to invest in different opportunities, does it matter to you if it's a solo founder versus, co-founders? Does that
That's
play
an
a part?
interesting question. Yeah. So I think being a solo founder is really tough. And I mean, frankly, this is when I really can't talk about. We're about to make an investment in a solo founder, and it's one of our key. And we got through it, but it's one of our key kind of risk factors in the deal. Frankly, I think everyone in business needs really a true thought partner. I can't imagine running a business without a true thought partner. And whether that's a co-founder or number 2 or number 3 or number 4, whatever it is, team is really, it just comes back to the same like team. No one can do this alone. Team is super important. So if it is a solo founder who can attract the right team, we're super comfortable. And if there's evidence of that, we're fine. Not everyone gets lucky to find, finding a great co-founder is lightning in a bottle. It's like such a lucky thing to have happen. But a really good founder can always, in our view, always find the right team around them. So if they've built a solid team and showed some traction with that team, that sort of alleviates some of that. But my view is no one can do this alone. I teach that in my class too. I'm like, the difference between like an inventor and an innovator is team. Like you can invent in your basement something, but to like get it out in the world and have other people use it and iterate it so that the market likes it, like you just need a team. You need other people.
Yeah, you can pick each other up when one's up, the other one is. It's all right to be down because you're sort of on that
Yeah,
teeter totter ride with each other. And,
right.
and and that kind of leads into my next question. You hit these bumps in the road, whether in personal life or in business. I'd be curious to hear about a serious challenge, Joy, that you have overcome, how you got through it, and what you've learned through the process.
So we talked about this a little bit before. So what I will reveal about the truly serious challenges I've had have had to do with kind of being the only woman in the room. And and that has been very serious at times, I would say. I mean, I guess the podcast, people can see me. I'm blonde. I'm also short. I'm a little person. And there are assumptions about me when I walk into a room. And I know that I've had that my whole career. I'm well aware of it. Some, groups are accept that more easily and are able to get beyond that more easily than others, I have found over time. How I've fought against that is over prepared. The typical things you do. You're like crazily more prepared than anybody else in the room. Like that's like you have to be that. Like that just goes without saying. But sometimes you just can't fight it. And I think you have to realize when that's the case and get out. Because some people really are just not going to give you a chance and they're not going to change. And I think that's okay. Like
Have you
that's the
seen the
world.
landscape shifting at all, or do you feel like this is still the case for you sometimes?
For me, not anymore because I'm so damn old and experienced at this point. When I was younger, it was much, much more of a challenge. At this point, certainly, with investors for the fun, the fact that we were two women for sure,
Oh,
gave people
interesting.
pause for sure, for sure. I mean, it made fundraising. We knew it though. We knew going into it. That's why we were raising the fund. We weren't out there to do something easy. We were out to do something very, very, very hard. And we knew it. And that was okay. And that's why rejection was like almost like we would laugh. Well, that went terribly. On to the next call. It was like that was really bad. Can you believe they said that? And we would just go on to the next call. And that's having a great partner. We could just like literally laugh it off because we expected it.
Your humor
Given,
becomes your armor. That's
yeah,
great.
and just like we were senior enough and seasoned enough and frankly financially secure enough to be like, okay, they just said that. Move on. Like whatever. So I'm not finding it as much other than when it's just like laughably obvious and I walk out, like whatever. I don't really know the answer. I am in tune with my students, with my daughter. Um, I get the sense that things are a bit better. Um, you know, Obviously we've had sort of macro movements that have affected it, and there's like waves of things going back and forth around that, right? We had Me Too, now sort of a backlash against Me Too, and no comment on that politically at all, just to say that that's the macro. And so, maybe people who were reacting to Me Too are reacting differently now. I don't know. I mean, I really don't know. I am hoping that this becomes less of an issue, but to say that it has not affected my career would be crazy. It absolutely has. I talk to my husband about it all the time because, he's part of like the old boy thing. I mean, I've been married for 32 years. Totally happy. Everything's great. That's truly, truly. I don't just say that lightly. I'm very,
So
very,
you and
very
your partner,
fortunate.
when you kind of
Yeah.
run into this now,
Yeah.
Joy, you can kind of
Yeah.
laugh it off. But in the early years,
Yes.
when you were less
Cried.
experienced, and okay, yeah, I was gonna say,
Cried.
how do you get through
Cried
it?
in the bathroom. Cried in the bathroom. Like, cried. Yeah. Like, if you want to talk like vulnerable, literally tears in the bathroom. Composing myself, splashing water on my face. Like, I cannot believe that just happened. And it did. And how am I going to go back out there into that meeting again? But I think I was sort of like, it felt really unfair and like, I was mad about it. I think there were tears of frustration, but also a little bit sad. Like, you know, there had been a lot of movement in the right direction, but yet it persists, right? And I
Yeah.
think that was a lot of like when Linda and I got to talking about this fund and starting this fund, it was the yet it persists thing that we saw in the data, and that for sure we had both experienced throughout our careers, that we were like, we were just mad about it too. We were just like, really? Like, we're just going to prove this wrong. We're going to do everything we can to prove this wrong. And the only way to do that is to be really successful.
Mm.
And that's what we're trying to be. And that's like being the most prepared, being, working harder, staying up the extra hour, waking up the extra hour early, which is a whole other life strategy I have. Just get up early. Everybody out there, get up early.
Get up early? Why is that?
Look, I mean, everyone has a different biorhythm. I'm super clear in the morning in a way that I am definitely not later in the day. And so, for me, moving my alarm from 7 to 6 about 15 or so years ago was like life changing. And I'm trying to do, I know Gwyneth Paltrow talks about this too. I think she's a 5:30 person, but I don't, fives are not good for me, but maybe I'll get there. But like 6 is fine. And 6 became really fine. So, and I just like, when my kids were home, that was a time when the house was quiet too, which is always helpful. Before like the craziness of like, get them up, get them out. Which by the way, I know I mentioned my husband before, could not have done without him. He was absolutely a partner in all of that, which is my other advice. If you want to do the family thing and the career thing, no matter what gender you are, figure out to do it with the right person, whoever that person may be, because really, it's really hard without it. Really, I mean, for me, it would have been really hard without it. Let's put it that way. I think for most people, it would have been really hard without it. So life hack, get up early, but the sort of channeling the frustration and almost like sort of disappointment in that, things haven't really changed that much into something productive like the 98 is sort of on like a big challenge of my life right now, and like a really fun one. And I feel super lucky to be doing that.
It is interesting, as you talk about sort of the macro environment kind of shifting back and forth. And it's a little bit harder to maybe put a finger on and measure how does that macro shift, affect things at the micro level. And you're a little bit of insight into that. And it doesn't affect you as much now. You've got more experience. And so that kind of comes with an extra set of resilience or you become a little bit more impervious to some of those exterior criticisms, but it hasn't gone away because, we look at the numbers in terms of, how much venture capital gets invested in firms that, have women at the top, and there's certainly a disparity there. So there's a lot of work left for you to do.
Right. And again, I think the only way to do this is to win, is to be good at it and to prove the opportunity for success in investing in women. It's the only thing we can do.
So Joy, I just got
truly, yeah.
Sorry, go ahead. Finish that thought.
No. I mean, I truly like the world is run by guys crunching numbers right now, right? I mean, that's kind of the truth. And so what we need to do is show them the numbers and say, you're a fool not to invest in a woman. You're just a fool. And we're going to prove that. Yeah. And that's what we're
like that, that data that you talked about early on, that shows that when you've got women at the top of a company, they're doing a better job returning investment to their investors more quickly and, at higher valuations. I think that's pretty compelling data. And so the more use cases, the more case studies that you can get to sort of continue to compound that data, I think it's going to go a long way to helping the cause. Yeah. But one last question for you. Before I ask it, Joy, I want to let people know the best way to get in touch with you or follow your story. What would that be?
Well, the 98 is on LinkedIn is a good way. We post sort of. We're not great at it. Honestly, we're so heads down focused on investing in the business right now. We've been like not so great at communication. Something we need to work on. But they can just email me, Joy at the 98. Super simple. Joy at the 98.com.
We'll include a link to the LinkedIn profile and Joy's email in the show notes. But last question for you, Joy. We've had a great conversation here today. I hope you and I stay in touch. And a year from now, we sit down and you're celebrating something you're super excited about. Yeah. What's that one thing?
Business thing, right? So a lot of things to celebrate in life. So from a business perspective, certainly closing a second fund would be like something to truly celebrate. We just want to pour more capital into these opportunities. So hopefully that will happen. That's our goal. Put myself out there saying that. We'll see if we can do it. Hopefully we can. Absolutely would love to see maybe one of the companies in an exit. Might be too early a year from now. They're still pretty young companies. But like an appropriate exit at the appropriate time would be great.
Terrific.
Lots of other things in life, but for sure those two things would be amazing.
Well, Joy, I want to be the first one to thank you for sharing both your time and your story with us today. I really appreciate it.
Oh, it's been lovely talking to you. Thank you so much for the opportunity, really.
And folks, that's a wrap on another episode of the Inspired Stories podcast. Thanks for learning with us today.